over the last 40 years or so.
Industry titan David Rubenstein setting out how, despite an era of challenging economic conditions with lowering growth rates, private equity can prosper, and pinpointing the areas he views as attractive in this climate. Illustrating how private equity outperforms other classes during periods of dislocation, with lower prices and deals to be done, the Carlyle Group's co-founder and CEO cited energy, distressed debt, opportunistic real estate and emerging markets as four of his top picks. So if emerging markets are a good proposition, where do the best opportunities lie?
The great thing about emerging markets is you have high growth. And so, across Asia we might expect 3 or 4 or 5% growth, and that includes 6 or 7% growth from China and India. This overall region is growing much more rapidly than Europe or the Americas.
And are there particular sectors within those localities that you would look at?
I think that what's exciting right now is that we're moving from products to services. If you think of Western economies doing that over the last 20 or 30 years, China's certainly doing that now. And that's into business services, financial services, education, healthcare. These are also all very interesting sectors.
Private equity in emerging markets is primarily focused on growth. As a result, there's a tremendous amount of job creation associated with it, as opposed to in other parts of the world where there may actually be job loss associated with those investments. And so alongside that, you obviously will see some reputational differences, and often it's a very positive reputation in view of the tremendous growth and job creation that can be associated with it.
I predict that in the next 10 years, private equity investors will be a third, unless they're regulated otherwise or have a home country bias. But their general exposure should head in that direction, where a third United States, a third Europe, maybe a little less, and then the remainder in the newer economies, and those that are driving global GDP.
So that's emerging markets. And Oak Hill Advisors Glenn August agrees that distressed debt will also be key.
We are at a fragile spot, in my view, in the global economy. There's no obvious growth engine. China is at best 5%, 6%, but that's consolidated, made up of maybe 10 consumer positive and 0 industrial. Europe is 1%, and the whole uncertainty around Brexit and maybe the ripples on immigration into Germany and Merkel and so on. So there's no obvious growth in Europe that's going to take us out.
What do you need to do in such a fragile growth environment?
I think the U.S. again is also low growth, and so to me, and we talked about the emerging markets being exposed, so to me you want to be in defensive strategies and opportunistic strategies.
And whilst there is optimism about the right strategies providing good returns, many believe that the industry also needs to evolve to remain successful. Terra Firma's Guy Hands, an established proponent of better alignment between LPs and GPs, with an emphasis on longer-term mutual goals.
As an industry, we need to shift to a longer-term pay structure. And that's particularly important in an uncertain world, because there will be years ahead when private equity's returns are not good. And we've all had businesses which have had bad years. But if our management teams in those bad years don't get bonuses, if our management teams in those bad years see the value of their LTIPs go down, if our management teams are aligned with us in those years, we feel okay. But if they're getting paid and we're losing money, we don't feel okay. And in a time of volatility and uncertainty, those years will exist. And having that alignment with your investors is essential. During the good times, it probably doesn't matter. But it does in the bad times.
And whilst alignment within is important, New Mountain Capital's CEO Steve Klinsky hopes the industry will see the importance of its place in society too.
Private equity doesn't just mean you lever a business to the hilt and you hope the economy goes your way. Fundamentally, we own in businesses and we can build them to success. We say that private equity is a form of business, not a form of finance, because fundamentally you're given capital by your partners and they say take capital, take skill, add those to Main Street companies, and make them better and create returns.
And you believe that puts you in a much better place in terms of society as well?
Well, I think it's totally consistent. If you're building, our motto has been for 15 years, New Mountain, building great businesses. If you're building great businesses, you inherently, I think, get good social metrics because you're creating jobs, you're paying well, you're investing, and we do a social dashboard every year where we track those metrics.
So for the hundreds gathered here today, the most up-to-date opinion and expert insights were on offer from the private equity world's most outstanding practitioners and thought leaders at this day 2 of SuperReturn International 2016.